I get the link, I will tweet and tell the Discord, and then we'll probably begin. Yeah. My first time doing this, so bear with me. All right, that was quick. We got the link.
Do we have the questions in the Discord? Is that how it's coming through?
Yes. So do you see the crypto tax calculator thread?
I'm just looking through and trying to find it now.
It's there's the death and taxes category, and then within that there's a thread.
Yeah.
Yeah. So that's where people will drop questions. There's already a bunch of great ones there, so I think we have
death and taxes.
Yeah.
I love it so much.
Yeah.
That could be a new slogan for CTC. Yeah.
Yeah, they're pretty much the same thing.
All right. I mean, I think, yeah, we're live now, so we might as well begin. Well, yeah, thank you all for being here to talk death and taxes and NFTs. I think it would be awesome if maybe Shane, you can introduce what the software is, what CryptoTaxCalculator is, where it came from, and why you created it, and then how it works, and just like, yeah, all of it.
Yeah, absolutely. So thanks so much for putting this together. So yeah, been focusing on crypto taxes and the pain around working through a reconciliation process since 2018. I was actually working on a decentralized exchange back then, but there was a lot of issues around regulation, etc., in Australia with the KYC, etc., and decided to pivot into trying to solve the pain around crypto taxes after having my own significant issues when it came to I was doing a lot of decentralized exchange activity at the time. And what do you do when you're trying to file your taxes and there isn't that trusted third party middleman who can provide you with a clean transaction history record? Basically the burden falls back on the individual, and it turns out to be really difficult because the blockchain itself isn't ideal for what you need from a tax perspective. You can get the information though, you just need to do a lot of wrangling. So since then we've grown quite significantly. Actually just released a funding announcement yesterday with Coinbase Ventures, Airtree, which is the local largest VC, and a few others as well. Been really focused on trying to solve the pain around crypto tax. It is extremely painful, as I'm sure a lot of your users would be aware of. Excited.
It's a nightmare.
Yeah.
I had a friend in America who manually went through every single transaction like a couple of months ago. Just thankfully he doesn't have like a million of them, but it took several days of painstaking work. And I think he was looking for this software. He was like, there's got to be something out there where you just, enter your... So how does it... Actually, no, before we get into that, Manisha, if you could quickly introduce yourself and then CryptoTaxLawyer as well, please.
Yeah, hi. So I'm Manisha at MoneyManisha on Twitter. You may have heard of me, maybe not. If you haven't, no problem. Hopefully this isn't your first dealings with someone in the tax realm. Contrary to the name, there won't be death with regards to taxes, and I can help with that. But a little bit about me. So I actually am specialized in crypto and Web3 and NFTs. I help support a whole host of different projects, individuals, creators, founders, some really fun projects that I'm working with and that I'm like a crypto accountant, advisor to, and strategist for is Boss Beauty's NFT, and then also Voxy's. And I have a few others that I cannot say, but yeah, I have a lot of fun stuff that I work on. So I'm very much ingrained in the space and very enthusiastic about it. And that's just a little bit about me. So yeah,
amazing.
Accountant, advisor, kind of a mixture of things, and also I'm very deeply into tax as well. So thank you.
Thank you. And CryptoTaxLawyer.
Hi guys. You can just call me Brian, I guess.
Brian,
works.
that's better.
I already put my face on there, so I might as well just de-anonymize myself entirely there. So I've been in the crypto space for a really long time as just an investor. I got into the 2013 cycle. Day one Dogecoin. Biggest mistake of my life was spending it. I don't know if you guys were around back then, but it was one Doge equals one Doge, and I spent millions of them. And oh boy, does that hurt today. But yeah, I'm based out of Chicago. I assist people. The name is CryptoTaxLawyer. I've recently started my own operation. Actually, I worked at another law firm doing crypto tax law, helping people file their taxes. You mentioned spending days going through the transactions. That's sort of what I help people either figure out on their own, or I'll do it on their behalf. I'm now sort of branching out. I'm advising on a couple projects, doing contract work in the crypto space specifically. And I think, personally, I think there's value. I can't say I was a lawyer first that got into crypto. I was crypto first, and I ended up being a lawyer. So I feel like I've been around long enough in the space to sort of understand the culture and the needs and all that stuff. So
Yeah, awesome. I think, there's about not a billion, but there are millions of people who need tax advice for their crypto situations, and not enough of not enough experts out there, I think. So it's great to see that you're here and trying to help all of us poor people with our death and taxes. Shane, if you could sort of just give us a run through of how CryptoTaxCalculator works. Like, do I just plug in my ETH address and it tells me everything, or is it that magical?
It'd be good to get to that stage where we're that magical. I think there's a path there, hence the funding. It's a lot of work. At the moment, you need to enter in all your centralized exchanges to begin with, because they've got their own data source, which isn't open source, I guess, like openly available, like what the blockchain data is like. So you need to connect your centralized exchanges, and then also your wallet addresses and the networks that we support, say Terra, Avalanche, Solana, ETH, those types of things. We'll pull in the data from the blockchain. And for the contracts that we have support for, we'll try to do as much categorization as possible. Importantly, it's still really important to go through that review transactions process. There's still a lot of nuances with the blockchain, but we're there as a tool to help you out. It's certainly easier to do than trying to record everything on a pen and paper and or an Excel CSV style spreadsheet.
Yeah, that sounds. It's not fully magical, but it seems very helpful. Yeah. So, in terms of like jurisdictions, obviously everywhere in the world, people have their own tax situations. Do you sort of tell people what their tax liability might be with the calculator for various jurisdictions, or do you just give them some raw data that they can then take to another accountant and figure out?
Yeah, so the ideal situation is that you're actually working with a tax professional, say somebody like Brian or Manisha here. What we do is provide overall gains and losses. So you can go through and categorize your different transactions, etc. And then that will produce a report that you can then take to your tax professional. It's important, depending on how deep you are into the space. So a lot of your audience would probably be pretty deep. And then there's certain transactions which, it's fairly gray as to what the tax outcome is. Even if you talk to a few different tax lawyers, you might get, you talk to 3 different tax lawyers, you'll get 3 different answers. So it's really important to work with a tax professional on some of these more advanced instruments, I suppose, to try to work out, what are the risks if you file the return, like what's a conservative versus aggressive option, what could be your exposure if you do have to file an amendment in the future. So especially if you start to get into significant amounts here, where you don't want to be in a situation where you're filing something and you spend the rest of the money and then come back in 3 years' time and it turns out you still owe a large amount of money to the tax authority. So it is really important that you do kind of go through that process and work with a tax professional. If you're a simple case, then maybe you're able to do it on your own. It's really, you've got to make that call as an individual to how you want it. You're ultimately responsible for filing taxes. The other really important point is that we've got no idea of the individual circumstances of that user. Are they a business? Are they an individual investor? These types of things can really impact your tax consequences, as well as, what are you doing outside of crypto? Are you trading stocks? That can impact your capital gains, etc. So yeah, what we're adding there is the ability to pull in all your data and normalize everything into one central location that's in a standard format. It's fiat denominated in your local currency, and then you can apply kind of tax rules on top of it. Like, you've got different inventory methods depending on what country you're in. For example, in Canada, you've got these superficial loss rules. So you've got an inventory method which is around average cost and superficial loss, which we can go into in more detail, but it's basically like how they've got this concept of wash sales within crypto. Whereas in the US, they've got other structures, and you want to be able to print it out to a 8949 form, etc. So we've got specifics for countries with support there as well. But yeah, really important, especially if you're really deep into crypto and you're doing some really, cutting edge type of transactions. If you actually talk to a tax authority about that, like, often what they'll say is that you're meant to engage with the tax authority before you do those transactions, so you understand the tax consequences, because you can't go back. But obviously, if you're aping into some new protocol late on a Tuesday night, that's not really realistic. So I guess
I gotta assume most people listening are hoping, like wanting answers for stuff that they've already done, not that they're planning to do.
So you got to think about the risk there, right? Like, if it's $1,000, but if it's $100,000 or $1 million or 10 million, you should probably really
that makes sense. This actually probably brings us to our first question. So anyone that is watching it, if you want to ask questions, head into the Zen Academy Discord. There's a thread, CryptoTaxCalculator AMA. Check announcements. There's all the info there. The first question is actually, it's quite complicated. But let's start with that. Why not? It'd be really nice if CryptoTaxLawyer could discuss, and I guess Manisha or Shane, feel free to jump in, could discuss about tax liability of a DAO's signatories of its multi-sig wallet. Assuming the DAO is not incorporated and operating on-chain on Discord, pulling resources to earn in play-to-earn NFT game, and its signatories, in brackets 5 to 7 of them, are from different jurisdictions. The DAO will have crypto assets. All right, so let's bring it back to the beginning. Could discuss the tax liability of a DAO's signatories of its multi-sig wallet. Is that something that you can answer or talk to?
Let's just start with don't take anything said as gospel, and definitely reach out as a DAO organization before you guys take individual actions. But with DAOs, the real answer is no one's truly sure yet what the tax implication is. The general, at least from the U.S. perspective, treatment would be you guys are some sort of partnership. You're sort of throwing in together, and the legal distinction between a DAO and a traditional sort of partnership isn't there yet. Even though a DAO operates, if you wanted, anonymously, you can all trust each other from Discord, just a bunch of usernames and a bunch of wallet addresses, and you can operate the same fashion as any other group enterprise. And if they're unincorporated, if there is no LLC, there's no, they're not operating under any sort of regulations like that. At least from the U.S. perspective, you would probably be treated as part of a partnership. And if the partnership has assets, great. The partnership, you treat that like any other partnership. And if you were to take money from the partnership, the IRS would expect you to file taxes as if you were paid out of a partnership. Now, who writes that paperwork? Right? That's the question with DAOs. There is no central authority to sit there and fill out paperwork for everybody. As a DAO, it's no longer decentralized. If one person's job is to collect everyone's data, track everyone who's invested in it, it becomes very difficult. But it is one of those stress points that everyone's already aware of. It's being talked about. I don't know if other countries have already taken measures on this, but in the U.S., it is still kind of a question, because at the end of the day, you don't know who's in the DAO really. How do you track that?
Yeah. I feel like a lot of things are going to be like it, especially in relation to DAOs. has not quite been figured out yet.
That's crypto generally
Yeah.
from the IRS perspective. So I'm curious if Canada or Australia has a different stance.
It's certainly interesting. I know in Australia, there's an election going on at the moment, and they've seen this as DAOs as an opportunity to really attract business to Australia. They're trying to introduce some new rules to formalise what a DAO is and how it falls. Trying to create a new corporate entity structure for DAOs, which do somewhat resemble partnerships. The point's been raised quite a lot around the risks from like a legal perspective, like who's actually part of the partnership. Is it the signatories of the wallet? Is it all the participants of the token, etc.? And yeah, as Brian pointed out, it's even less clear who's the beneficial owner of any income, etc. So certainly a lot of questions there.
Yeah. All right, maybe we'll go to an easier question. So this, could you please discuss briefly how NFT gains are taxed in Canada, and if the NFT appreciates in value but you have not sold?
Oh, so I'm assuming this question is for me.
I would assume so too. Yeah.
as the Canadian of the group. So I know CryptoTaxLawyer put a little bit of a disclaimer, but I'll do one as well. So nothing kind of we share on here constitutes any tax, legal, or any other kinds of advice, including financial advice, or even really life advice. It's hard to say based on your personal situation. And it's just informational and general guidance, and it's always best to check with a practitioner. We're not engaged as your professional practitioners. So, but in general, capital gains. So it's interesting because I think a lot of people that come to me, the first thing they ask is like, so am I going to be charged long-term capital gains rates or short-term? And they're Canadians. And because in the States, there's a concept of having gains long-term and short-term. But in Canada, it's a little bit simpler. So if you are an NFT collector or investor, and you're an investor, so not a day trader, okay? So if you're an investor, then most of the time, all of your gains or profits are going to be treated as capital gains. Now, if you are a day trader, your profits may be seen as business income. So there's actually a difference. So depending on what your intention is to be an investor, do things a little bit, less frequently, hold things more long-term, you're going to have capital gains treatment versus a day trader who's going to have business income treatment. And the beauty of having capital gains treatment in Canada is your capital gains are actually only 50% of them are taxable. So if I make a profit of $100, only $50 of that profit is going to be taxed at whatever rate you hold it personally. And there's different tax rates. So depending on which tax bracket you fall in, the rates may be different. But yeah, that's essentially, if I were to give a short snippet on how is to be taxed, that's what I would say. Hopefully that helps.
Yeah, I think that was great. All right, the next question is from Praetor. Can you please talk through the tax implications of non-purchase transactions? So for instance, gas from failed transactions, gifting or lending ETH, buying merch, or like NFT NYC tickets using ETH, and even like bridging NFTs from one blockchain to another. I don't know if anyone has any thoughts on. I mean, let's start with gas from failed transactions. Where does that fall from like a tax viewpoint?
Yeah, so again, with the disclaimer, obviously, there's some important points just from a calculation point of view. So if you're disposing of gas, say it's ETH, how much gas are you actually spending here? Like if it was, say, $10,000 worth of ETH in gas fees, like you're trying to FOMO into an ICO, for example, that's a significant amount. And if you initially bought that ETH for $100, there's arguably a gain involved here. And then So there's this concept of what's the gain on the fee itself, which is something that you could consider. There's another thing here, which is if you were going to claim this as a loss, where would you place that loss? From our conversations with different advisors, this can really depend on your tax jurisdiction. So it's really important to talk to a tax professional. Lots of tax authorities seem to have this kind of stance that it's okay to claim commissions, but if it's not a commission-based fee, there seems to be more questions come up about whether that's claimable at all. And if it's a business, generally speaking, maybe it's a little bit more claimable. But if you're an investor and it starts to become generally less clear whether that's claimable, and if it is claimable, on what transaction it's claimable on. So I'd be curious as to what Brian and Manisha have to say about that as well. But there's quite a few considerations there about gas fees that are kind of phantom gas fees, I guess, like they're kind of by themselves. So, and how you associate them to a particular trade or commission, or whether you have to do that at all.
Really quick, I can just sort of run through that list. I would treat gas fees from failed transactions probably just as a spend. If it depends, it's something that you talk to a tax professional about to see how you would treat it. Some people, they sort of burn through gas as part of their trading. Just the method of trading is they just do, if you're doing some sort of high frequency thing, and there'd be a lot of failed transactions. And so you're choosing to hit that transaction, you've spent it, and if it failed to go through, well, the ETH was spent. So bad investment on your side, I guess. Giving gifts is not a taxable event, but you should, the gift or the donee, the person receiving the gift, needs to know your cost basis, your holding period. And you should just document that in like a letter. It's called a gift letter, just so that when they go to sell it, they know what they've inherited from you. They inherit your entire holding, your cost basis, the works. There are no taxes on giving a gift until you've given, I think it's like 11 point something million dollars in the United States over the course of your entire lifetime. But any gifts over $15,000, you do need to file a gift tax return to the IRS so that they can track how much you've gifted away. But if it's under $15,000, there's nothing to report at all. It's per person. So if you have a married couple, you can give each of them $15,000, so $30,000, things like that. Receiving, I already sort of went over that. Receiving a gift is never taxed, but when you receive crypto and you sell it, you need to be able to calculate your capital gains, and you would do so as if you were the initial purchaser. So that's why it's important to get those gift letters if it's any sizable amount of money being transferred. And then lending, taking out a loan, receiving a loan, those are not taxable events. But if you are liquidated, so you put something up as collateral, you take out a loan, and your collateral gets liquidated because the markets change or something like that, then it becomes a sort of retroactive sale. So it could trigger a taxable event, but just taking out a loan in crypto or of ETH or giving out a loan, that is not considered taxable. But if you are lending something, any interest that you receive, that's income, and anything that you spend on interest is considered a spend. Merch, that's just a spend. It's like anything else. Sale, you know, calculate the capital gains and losses. And bridging NFTs from one blockchain to another, that one's a very gray area. If you're bridging NFTs, it's definitely talk to a tax professional situation there. Sometimes one blockchain will give special attributes. They'll give you money for holding it on that blockchain, things like that. And under the IRS guidelines, it could be considered a taxable event. On the flip side, it's something that you should definitely talk to a tax pro about, because the IRS guidance is not clear on this. It's really an aggressive versus conservative sort of calculation. But I'll stop there.
Yeah, that last point, the bridging one, is actually a real doozy, which I think it's largely been overlooked by a lot of participants in the space, because intuitively it just seems so natural, like, oh, you're just bridging, it's just like a deposit and withdrawal. But there's certainly a grey area there that's come up from our discussions as well. So we really require the user to define what's going on here on their side. I think this is one of those things where, you know, it was like crypto to crypto transactions being a taxable event back in 2016, 2017 was surprising to a lot of users. This could be another kind of doozy point that comes up later, which really bites people, especially this concept of like, do you have additional attributes that Brian was pointing out? Like, has the nature of the asset changed because you've transferred it to a new network? For example, if you've got Bitcoin and then you wrap it and put it on the ETH network, and now it's acting as an ERC20 token, is it fundamentally a different asset? And I think the question comes back to, are these tokens mapping back to another kind of entity, like the Bitcoin entity, and this is the asset? Or is it the actual token itself? You know, is it like an ERC20 token different to a B2 token or BSC, etc.? Like, it's really unclear where this line in the sand is. It's hard to get clear guidance. In Australia, we've got the Board of Tax Review at the moment, and this is one of the topics we're going to be bringing up. It's really hard to get guidance on this. From our engagements with the tax authority, they've suggested, you know, if there's a substantial change in the digital asset itself, then it's actually a new asset. So what's the actual qualities of that asset? Very, difficult, that one.
Yeah. Honestly, I had never even considered it, so that's something to think about. Yeah. Sort of maybe an extension of that is, how do you account for taxes when you swap NFTs? So like trading with another person, my NFT for your NFT. What's the cost basis for the new NFT that you receive? And what about if you're swapping for a combination of, like, say, NFTs and ETH for an NFT? It's like, I mean, I've heard a lot of people say they don't want to sell their NFT and then buy a new one because it's taxed, but so they try to find people to swap with. Is that an avenue to sort of avoid a taxable event, or is that just something else that's going to bite people?
I think, I mean, all of this comes back, again, the disclaimer, but all of this comes back to, like, you know, it's kind of under this barter rules. Like, if I swap one house for another house, but both houses have gone up to $10 million when I bought them for 100K, you know, is that a realization? Just because you've removed the fiat value there doesn't mean that you haven't triggered a disposal.
To sort of back that up, I'd say, yeah, I mean, there are art collectors that try to do this all the time with real, physical artwork. And that's likely an approach for NFTs if you were to treat it like, art, swapping art for art. There are sort of professionals out there that can gauge what the value is. And so if you bought, CryptoPunks for $20 back in 2017, and you swapped it up for some, I don't know, NFT game assets, there are sort of ways to gauge the market value. And if you're going to swap those, you might be expected to hire an appraiser and do all that, which in the crypto space, there's not a whole lot of them. So.
Yeah, I think there's this general rule of thumb wherever you hear, oh, why don't I do it this way so I can avoid taxes? That's where you really want to be talking tax.
That's the death and taxes stuff.
Yeah.
Yeah. Why don't I do it this way so I can't die? Like, it's the same type of logic.
Yeah.
It doesn't actually exist.
Yeah.
Do you mind if I just add something too that might help kind of like set the room a little bit? I love to kind of usually start this as an intro, but I know we're kind of in the middle of it now, but it might be good just for anyone who's like new to taxes and NFTs and crypto and is just wondering like what there's like taxes on this stuff. So typically, just like if I were to break it down very simply, and again, informational purposes, the disclaimer that I mentioned before, but when you first buy into crypto, so you take fiat and you purchase some crypto, that is not a taxable event. But almost everything else that you do with that crypto will very likely be a taxable event. And what do I mean by that? So when you take crypto and you exchange it for another cryptocurrency, that's a taxable event. When there's you take crypto and you use it to purchase something, such as an NFT, there's tax implications with that. If you and that NFT, if you sell that NFT, there's tax implications. And then also, if you take crypto and you cash out to fiat, there's also a taxable event for that. So really, anywhere that there's an ownership transfer is very likely going to have tax implications. Now, with that, one thing that's not a taxable event, now that everyone's going, oh my God, everything's a taxable event. If you're going from one wallet and just transferring your funds to another wallet, that is not a taxable event because you still maintain ownership. They're still yours. No tax triggering event. But almost everything else usually has some sort of tax implications associated with it. So just to keep that in mind. If you're wondering, do I have to report this for tax purposes this year? Do I have any taxable transactions? If you did anything other than just buy in, very likely you probably do.
We're all doomed, basically.
Just add to the confusion there, it also really depends on your tax jurisdiction. For example, in France, so like a large extent of their guidance suggests that, you know, it's only when you transfer back the fiat value that's the taxable event on a flat rate. So always check with your tax professional in your local tax jurisdiction. But the important point here is to be really aware that any transaction that you do in crypto, it's important to be aware of the tax consequences. And yeah, there could very well be tax consequences to pretty much everything you're doing.
Yeah. I'm Australian, but living in Germany at the moment. They have some interesting things here. Yeah, I'm not going to get into it, but I think one of them is if you hold for 12 months, and again, not tax advice, there's no tax as a capital gain, which is
that got weird
nice.
Too. Yeah, it's quite interesting. I think it's like under $600 is not taxable, and then over 12 months. But I mean, how we handle that in the calculator is that we break these things out. So you've got, oh, look, these are long term, and you can even define what long term is. And then you could just not apply taxes to that long-term bucket. So it's kind of this idea of abstracting away from the specific rules of that country so that you can apply the different settings based on your local circumstances. But it's really, if there's one takeaway here, it's, hey, if you're doing something in crypto, it could very well have a tax consequence. And it's really hard to find ways to get around this as well, because the tax authorities are quite good at making sure that there's no loopholes where possible.
Yeah, and it's all public. Like it's all on a public blockchain. I think people think, oh, it's crypto, I'm anonymous. But then when you're getting it back into your bank account, which is the end goal, there's a trace.
Yeah, that often comes up very quickly within the conversation is, how will they know? You know, I bought on Coinbase, but then I transferred to this international exchange, and then I shifted it to this other wallet, and now I pushed it to another wallet again and bridged it over to this other network. Even I can't work out my taxes, so how will they know? But the thing is, like you said, it is all publicly visible, especially the blockchain data, and the transfers between exchanges also happens on the blockchain. So they only need to find a couple of breadcrumbs here, whether you're from when you entered into the space or when you exit. Particularly when you exit, if you exit with a significant amount of money, there's always these questions around proof of funds as well. How did you obtain that amount of cash in the first place? So it's actually, and the tax authorities have a long time to have a look at this. The blockchain data isn't going away anytime soon unless everyone turns off their computers all at once, maybe. So it's just lying there publicly visible for everyone to see, and it's actually perfect for them. They don't have to go and chase down an exchange in the Bahamas, etc. It's not, they don't have to go through that subpoena process. Like, it's just lying there waiting to be audited. So
yeah. A lot of people keep like over the last, I don't know, year, I've heard so many people say, I can't wait till there's tax software where I can just plug my wallet in and it'll tell me exactly what I owe. And I keep saying that when someone develops that, they're going to sell it to the government and they're going to make millions, because every government in the world will want to take, just use that to track everyone, basically. Yeah, I mean, it seems like that's something that's going to happen. And as you said, the information is just laying there; it's not going away. So they can always go back and see what happened 3 years ago, etc.
I mean,
No.
the tax authorities are already using tax software, and the software is getting more advanced over time as well. So it's already here.
Sorry, go ahead, Brian. I noticed that you're.
Manisha, you go first.
Oh, thank you. I was just going to add to that. It's so interesting because people have come to me and asked me, like, do I really have to file? And I'm like, at the end of the day, it really is your choice. You're meant to, and I would highly advise you file. And they said, but hypothetically, if I don't, what happens? And I'm like, well, hypothetically, maybe they won't find out. But I almost guarantee you that they will eventually, when their systems become robust enough, and that you're going to be way worse off if that's the case. So you might as well just try your best and get it right now, so that because there's also like a statute bar and statute of limitations that happen where they no longer can go into previous periods after a certain amount of time. And so if you really want to start the clock on that, you can't be evading taxes, because one of the reasons they can go into previous historical years is if they believe that you've been evading taxes. And so, one thing I always say is just try your best, because, if you put your most reasonable effort out there, at least you're starting the clock on, putting your information out there in the most reasonable way. If rules change, then, and it becomes more favorable, even, you can go back and you can amend if you need to. But the other thing is, if rule change and it goes the other way, then at least you're done and that tax year is kind of closed. So I think it's more beneficial just to report rather than try to wait and see what happens, because I think you're going to be, with the penalties and the interest, and there can be like criminal charges as well. I don't know how, depending on the jurisdiction you live in, how willing they are to act on all of that, but I wouldn't want to be the test subject for that. So I don't think anybody else really does either. So I would just say try your best to report, and you're going to be in a better situation and set yourself up for a better future, ultimately. And you're right, everything's transparent, everything's on the blockchain. I can go and see what my friends are doing, and I have. You know what I mean? Like, it's very public, and I think it's just a matter of time before they're able to figure out whose wallets belongs to who. And you don't want to be in the situations where they're asking you, does this belong to you?
So I don't want to beat a dead horse here, but when the IRS asks questions, they say, all right, prove to us that your tax filings are accurate. Like, the onus is on the taxpayer. This isn't a criminal court. They don't have to prove anything. If they say, where did this money go? Say Coinbase is your on-ramp, Coinbase reports to the government, you move $10,000 to the account, or $20,000, I don't know what the threshold is. The IRS could say, all right, you moved it off of Coinbase, where did it go? And if you don't report where it went, or you link, through the blockchain, like everyone's saying, it's on there, at a certain point, you're either going to keep digging your hole saying, no, I didn't spend it. No, it wasn't taxable. But if they say, great, let's see the address, who owns this address? And you didn't report anything on your taxes, they'll eventually, the onus is on you, and you're just under audit. And then you're going to want to lie on an audit, because that's how they got Al Capone, was what, tax evasion. And like everyone's saying, and I also like to bring up that a lot of white collar crimes where people are embezzling money, things like that, it can go on for years and no one catches you. But then when someone making $40,000 a year buys a summer house worth $500,000, the government might say, where'd you get that 500 grand at? And that embezzlement goes away. And tax evasion is somewhat similar. If you don't have a day job and then you all out of nowhere just get a windfall of money, they might ask where. And then if you say crypto, like Manisha said, they can claw back for fraud indefinitely. And then you're going to be paying all those fines. You're going to pay for a lawyer. you gotta do all that stuff, and it's a lot cheaper just to do it yourself. And like she said, even if you're doing your best effort, it doesn't need to be 100% perfect, but at least try.
Yeah.
And the thing is, if you get the appropriate tax advice straight up and you actually do have an understanding of your transactions and what the tax consequences might be, you can often structure your transactions in a way that do help to minimize your overall taxes. And so not only are you removing the burden of going to jail or something similar, but that sense of fear. But in addition, you're being proactive and considerate about your tax liability, and actually you'll just end up in a better spot because you can minimize those taxes. It might be worth tracking to make sure that, hey, if I dispose of this ETH, I can wait until it's over 1 year, so it's long term. So there's all these situations which you'll come up when you start to do your tax return. You'll look back and you go, oh, geez, if I just held it for an extra month, I would have saved all this money.
Yeah.
So it's kind of being aware of this proactively. That's just the development of becoming a sophisticated investor and just being aware of how to structure your trading activity to maximize your net profit, not just your gross profit.
Yeah.
That's a really great point, Shane. And actually, one of the exercises that I actually try to do with my clients is every time they come to me, I try to look for ways to optimize their situation, and also with their dealings on the blockchain. I feel like people do a lot of unnecessary transactions that result in like tax implications that they could do in a simpler move, and it's way less tax. So you're right, like sometimes it does actually help to work with someone up front so that even like your current year activity, you're actually more cognizant of what you're doing and you can do it in a more efficient manner. And also it really helps because one thing I also try to do is give people a range of how much they should set aside for tax every time they take profits. And so if you're slowly doing that over time, it doesn't feel so burdensome at the end of the year. And, we all like to say we're still early. And so if you truly believe that, why not start now? Because this is just going to continue on. So there's just some thoughts there. But yeah, I completely agree.
Yeah, that makes so much sense. All right. A complicated question again. How do you report rebase tokens in the US? So Ohm, Time, Butterfly, etc. I'll leave it there. They break it down some more, and maybe we can get to that. But does anyone have an understanding of how to report these rebase tokens?
As best as you can. There's not a sorry, I joke, but these projects, it's somewhat of a gripe with the crypto space is they make these projects and it's almost impossible to know at any given time how much you hold, what the cost basis is. So I mean, the mechanics of how I would report it, if you just get phantom tokens, one way you could do it is say, if you gain tokens, just sort of somehow, however you're going to do that, apply the cost basis of your initial investment and apply that cost basis to the entirety of the new tokens. Because if the value of the token goes up and you get more of them, is it truly, and this is a question, the IRS guidance has nothing solid on any of this, but the question becomes is if you could also lose tokens, usually they're expanding in the volume that's out there, but theoretically they could shrink as well. And so for me, I'll tell people that unless you want to take it as income, which is what the IRS guidance sort of would imply on the face value, but that guidance was written before rebase tokens were popular, and it seems almost untenable to say, you just realized $8,000 in gains when really you just held something, and you have no control, and then you could also lose it. You have no control. And so I would just take the cost basis and apply it to the total volume you have when you sell it. But the problem is how do you track that? It's almost like a Band-Aid, and maybe Shane has a good answer here. But yeah, they're tough. It really is tough. So if it's a lot of money on the line, I'd say definitely talk to a professional.
Yeah, so it's really difficult. I mean, this is one of the instruments where the magic starts to, it's more work to be done essentially, and there's some really strange crypto instruments out there, so there's a lot to cover as well. I think Brian's suggestion there is a lot easier to track, and there's also this concept of beneficial ownership that comes into play as well. For example, in the UK recently, they announced their HMRC guidelines. They even suggested, just lending, like you can't actually conceptually lend crypto, you either dispose of it or not with these smart contracts, and is it in your beneficial ownership or not? And they were suggesting in their actual official guidance around some of these CFI type of lending products that the deposit into these products is actually disposal for tax purposes, which is raising a lot of questions and debates in the UK right now. But it's just to highlight just how complex this is. And so, when does this crypto actually hit your wallet is another question. If it's tied up in a smart contract, and then that smart contract is divvying it, like lending it out again, etc. And there's all these types of mechanisms there. Like there's quite a lot of questions about this beneficial ownership as well. So yeah, it's best to be working if you're going to engage in those types of complex instruments, and it's the type of money that you're concerned about from a tax point of view. That's probably worth really engaging with a tax professional to work out how to best attribute this.
And if you're making a project and you're considering doing a rebase token like this, please consider your buyers and their tax forms when you do so. I feel like this is a point of contention just personally, where regulators might look at crypto and say, look, they're not paying their taxes. And in the case like a rebase token, how do you pay your taxes? It is hard for me, as Shane sort of said, it's a global question, is where does the line get drawn? And if you're developing a project and you can track somewhere in the back end, any given day, what's in any given wallet, please publish that data, because it would make things so much easier.
Is the act of staking a taxable event in the US?
Putting your assets into a staking wallet, a custodial staking wallet, I'd say no. Of course, anything that you get in return would be income. I know that lawsuit hit the headlines a few weeks back. The status quo remains the same. Staking income is income. So you're going to pay taxes on anything you gain from staking. But just putting in a custodial wallet is probably not taxable, or it's not taxable. The question, though, becomes if a project calls something staking, but you're receiving a token in return, almost like a receipt, then it becomes, well, did you just get a swap, right? Did you just trade it and they're calling it staking because you can always swap back, but it could be a completely separate token. And that's where it's really project to project, because just because someone says it's staking doesn't mean it's the same thing as more the traditional sort of like a Cardano staking wallet kind of deal.
Yeah, that was helpful. All right, we'll probably have to make this last question because I'm going to have to jump off in about 5 minutes. Would love to know how various jurisdictions calculate sales tax, VAT, GST on NFT sales when the buyers are anonymous.
Is the buyer anonymous? I guess he is from the seller's perspective.
Do you want some help, Shane?
I've seen this problem. I'm just trying to think about how to answer it. Maybe Manisha, I'm actually quite curious about what you have to say.
Yeah, I've actually had to deal with this with a lot of the projects. And one of the most beautiful and difficult parts about Web3 is you can remain anonymous. Now, with that anonymity comes a lot of difficulties from a project or creator or company perspective, because you still have to meet your obligations. And one of those could be sales tax. And depending on what jurisdiction you're in, there are rules when you don't know who the purchaser is and how to collect sales tax. So in Canada, there are rules so that if you don't know and those people aren't doxed or you don't KYC, you can figure out a percentage to collect for sales tax. Now, there are things that can be done if you are in this boat and you do have to collect sales tax. There are like sometimes things you can do as like a project creator to try to get around the rules, in the sense that you don't need your buyers or customers to fully dox themselves, but you could request like basic jurisdiction information from them if they're willing to share. So there is ways to kind of approach it, but unfortunately the onus always falls back on the sellers or the creators or the companies. So it is still your unfortunately kind of like your problem. If you can't figure out who your buyer is, you still have to meet your obligations. I'm like, there's no other way to really put it, unfortunately. But it is great that someone's asking that question, because I've gone in so many times and people don't even realize they have sales tax or VAT like implications, which is way harder. You know, it's way harder to go back, especially if you haven't built in your costs for the sales tax portion. You can't go back. So you kind of, we work backwards then at that point. But yeah, it is very likely you should really pay attention for anybody who is a project creator, a company, or, you know, providing a good or a service, to really take a look at what jurisdiction you're in and if there are requirements for you to collect based on whether you're selling an NFT or anything else, and work with a practitioner to figure out what your tax liability might be in terms of sales tax. Because you're right, a lot of this topic of conversation has been related to income tax, and not on the sales tax side of things. So definitely a great question, Shane. I don't even know if that helped paint a picture for you. It's not a direct answer because it's dependent on the situation, obviously.
Yeah, exactly. And I was quite, I think you raised a good point there. Like the seller, it's largely the responsibility of the seller to work out their tax obligations. And if they're selling to anonymous people, they need to consider this in the first place and what information they need to gather if required. There's also these rules around, for an example, Australia, you've got GST exemptions for crypto, generally speaking, but NFTs might not fall into that because it's almost like different again. Yeah, so there's quite a lot of complexity there.
Yeah. This is all so complex and messy, but it's important to think about. It really is. And earlier rather than later, I think, is one of the key takeaways from this, because not only will you avoid being in a situation where you have to pay a bunch of back tax or go to jail, you can strategize and reduce the overall tax liability if you know this stuff in advance. So yeah, thank you all for being here. Like, this was so wonderful and insightful, and I'm sorry to everyone who asked questions that we couldn't get to. I mean, honestly, I'm sure we could be talking for like 7 hours and we still wouldn't cover. We'd probably not even scratch the surface on one jurisdiction with all the different edge cases and complexity and stuff that's involved. But yeah, thank you all. I'd love to have you back on for another chat at some point in the future. But yeah, really appreciate it.
Definitely. Thanks so much for putting this together.
Yeah. Do you want to plug CryptoTaxCalculator quickly?
Yeah, so CryptoTaxCalculator.io. I think there's a promotion code here that we can share in the chat as well, hopefully. Yeah, you just log in. It supports lots of different countries. You just sign up and enter in your public wallet address, as well as your centralized exchanges, and then you can get everything pulled into one centralized view where you can kind of go through, review your transactions and generate tax reports.
Amazing. And we'll add links in the description after the fact to the website, to all of your Twitters, or whoever wants their Twitter added. Yeah. Thank you, Shane. Thank you, Manisha. Thank you, Brian.
Thanks so much. It was great having this conversation. I know people don't want to have it, but I enjoy it.
Yeah, thanks for having me.
Yeah, I appreciate it. Take care, everyone. Bye-bye.
Thank you. Bye.